Hey guys, it's Reed Limpert with JRL Premier Wealth Planning. I just wanted to go over with you today a brief overview, a very powerful end of year tax strategy combination that we use for high net worth clients around the country all the time. You're going to see it's very, very powerful and very scalable. So it makes it very, very attractive. Here's the title. It's a combination of our discount acquisition strategies and tribal tax credit combo. Like I said, very powerful, as you'll see. What we do at a high level is we introduce conservative yet esoteric planning strategies to high net worth clients around the country, including their advisors. Obviously, conservative means firmly embedded in the language of the law, including treaties, statutes, regs, case law, etc. And esoteric, meaning these are specialized, lesser known techniques created by the top attorney groups around the country. These tend to be very much strategies that you'll never be able to find on your own because these groups typically do not market these strategies. They're very much underground within a very small community of the tax planning specialists around the country. So what we do is we aggregate, synthesize, and manage a network, the very best creators and providers of different strategies and services that bring unique value to our clients. Pretty simple. We essentially act as a quote unquote broker slash consulting firm for all these specialized strategies. So let's go over the first strategy, discount acquisition strategies. It's a unique opportunity to buy goods at deeply discounted rates from market value. In this case, we're talking about a product available at 80% off rates. Now, the second part of the strategy is you can donate these discounted goods that are purchased to a 501c3, and that's limited to 50% of one's AGI per IRS publication 526. So you can essentially create a deduction of as much as 50% of your AGI using this tool. The taxpayer, you presumably, is able to take a fair market value deduction. If the partnership votes to donate the asset to the charity, this would result in a 5x leverage deduction, 5 to 1. Now, the fair market value is ascertained by a qualified appraisal, which would be completed within 60 days of donation. That's part and parcel of the law. Now, let's look at the three main mechanisms involved with this strategy. First, you're buying goods at a discount. That's completely legal. Secondly, the client or partner tacks on to the holding period of the partnership interest received, which is completely legal as well, per 26 U.S. Code 1223. You can look that up yourself, obviously. And donating goods to a 501c3 charity and deducting at fair market value, also completely legal. So it's a pretty simple three-step mechanism. All the essential parts are very, very legal, as you can see. So it's very much between the lines. So the two offerings that we have available this year, the primary one is a medical device, which is available at 80% off. Now, we've got a backup offering as well, but that's a slightly lower discount. Why do we have a backup offering? Well, because the medical device is a program that's very well established. Last year, this particular program ran out of inventory in the middle of December. So just in case inventory runs out again, we have a backup offering just in case. Hopefully, you don't have to worry about that. But I would presume the best bet is to implement before December 1st to make sure that there's plenty of inventory available. Medical device is available at 80% off. That creates 5x leverage if donated. We do have a charity lined up for both products. Obviously, the backup offering, a little bit less leverage. Instead of 5x, it's 4x. 4x works great still in high tax states. 5x is going to work much, much better in the lower tax states. Florida, Texas, other states where there's no income tax especially, you want that 5x because the 4x numbers just don't work. 4x numbers work great in California. 5x numbers work better everywhere, obviously. Second strategy is called Sovereign Tribal Tax Credits. Now, this is a new program that has been established between Native American tribes and the Department of Treasury. This is a negotiated agreement involving those two parties. It's a dollar for dollar tax liability offset using these tax credits that are available. Now, the credits are issued to the tribes and by law allowed to be transferred one time. So Department of Treasury knows that the tribes are looking to sell these, and they have come out and said, you can transfer these one time and one time only. Now, these credits are free of traditional tax credit limitations. So you don't have to attack only passive income with these credits. This can attack active income as well, which makes them very much a game changer. These are available for businesses, individuals, partners, shareholders of pass-throughs. Any type of taxpayer can purchase these credits. The taxpayers or entities claim the credits on their returns. The IRS and Treasury cross-references the registration number with its records to ensure legitimacy. And the current pricing of these credits, which is subject to change, so of course, you probably want to act sooner rather than later, is $60,000 for $100,000 worth of federal tax credit. So you know, if you buy $100,000 worth of credit now, you're going to make $40,000 on that purchase. So it's pretty simple. That's what's great about it. Now, considerations to these strategies: there's no current proposals to alter the code sections involved or the tax credits. These are not listed transactions nor transactions of interest per the IRS. These provide fully liquid tax savings for you and your family in very short order. There are no long-term commitments or tie-downs, although both can be utilized with a 5-year carry forward. So you can carry these forward into the future on both strategies. Now, here's a basic customized proposal for a hypothetical client with a baseline AGI of $1 million. Top end tax rate of 40%. So obviously this client's in a lower tax state. Higher tax states, the numbers are going to look better, obviously. Now we're talking about a 5x leverage deduction right off the top, maximum of 50% of AGI. This creates a $500,000 deduction when we start with $1 million AGI. To get that deduction requires an investment of $103,000. That extra $3,000 you're seeing there is for an additional processing fee. This creates tax savings of $200,000, which creates a net gain of $97,000 on this particular strategy. Now, when we layer on the second strategy, the sovereign tribal tax credits, this client would hypothetically invest $60,000 to buy $100,000 worth of credits, which produces a net gain of $40,000. Pretty simple. So when you add these two together, you're looking at an investment of $163,000, producing tax savings of $300,000, resulting in a total net gain of $137,000. So simple, scalable. As you go up in terms of your AGI numbers, these results scale up as well. If you scale down, obviously the results scale down as well. But these strategies work with a very wide variety of folks. So very, very powerful, very, very scalable. That pretty much covers it from a hypothetical perspective. If you'd like to talk to us about a customized proposal and how these planning strategies could work for you here in 2024, please reach out to us ASAP. The easiest way to contact me is via email, reid@jrlwealth.com. You can also call us. Email is definitely going to be easier and a faster response. So definitely reach out to us though if you're looking at seeing what we can do for you. Thanks so much for your time. I appreciate it.